Good afternoon. Thank you for welcome to the Office of Tax Appeals. We're ready to begin with the appeal of New Alien Corporation. OTA case number is 220-29627. The oral hearing will be live streamed. Also present today is a stenographer, Ms. Rodriguez, who is reporting this hearing verbatim. To ensure we have an accurate record, we ask that everyone speaks one at a time and does not speak over each other. Also, speak clearly and loudly. When needed, Ms. Rodriguez will stop the hearing process and ask for clarification. After the hearing, Ms. Rodriguez will produce the official hearing transcript, which will be available on the Office of Tax Appeals website. The Office of Tax Appeals is an independent and neutral agency. It is not a tax court. All three judges are co-equal decision makers and can ask questions at any time. I'd like to offer a few reminders to help the process run as smoothly as possible. First, please ensure that your microphone is not muted when you speak. Otherwise, your voice will not be picked up on the live stream. You need to speak into your mic for it to be picked up in our live stream. And as a reminder that these proceedings are being broadcast live, and anything said today and any information shared today is publicly viewable on the live stream. With that said, are there any questions before we go on the record? Okay. Ms. Rodriguez, are you ready to go on the record?
Yes.
Thank you. We're opening the record in the appeal of New Alien Corporation, OTA case number 220-29627. This matter is being held before the Office of Tax Appeals. Today's date is December 17th, 2024, and the time is approximately 1 p.m. This hearing is being convened electronically. Today's hearing is being heard by a panel of 3 administrative law judges. My name is Keith Long, and I will be the lead administrative law judge. Judge Cheryl Aiken and Judge Amanda Fatigue are the other members of this tax panel. All 3 judges will meet after the hearing and produce a written decision as equal participants. Although the lead judge will conduct the hearing, any judge on this panel may ask questions or otherwise participate to ensure that we have all the information needed to decide this appeal. As a reminder, the Office of Tax Appeals is not a tax court. It is an independent appeals body. The panel does not engage in ex parte communications with either party. OTA will issue an opinion based on the parties' arguments, the admitted evidence, and the relevant law. For the record, will the parties please state their names and who they represent, starting with the representatives for Franchise Tax Board.
Good afternoon. My name is Matthew Miller, representing the Franchise Tax Board.
Good afternoon. This is Brad Gattino, also representing Franchise Tax Board.
Thank you. And for appellant?
Kathy Freeman, representing New Alien Corporation.
Thank you. We are hearing one issue in this appeal today. It is whether appellant has the capacity to maintain an appeal before OTA. My understanding is that there are no witnesses today. Is that correct, Ms. Freeman?
Correct.
And Franchise Tax Board?
Correct.
Thank you. The exhibits in this appeal consist of FTB exhibits A through H. At the pre-hearing conference, appellant stated that there were no objections to these exhibits. Can appellant please confirm that there are no objections?
There are no objections.
Thank you. Additionally, appellant submitted an exhibit index identifying exhibits A through O. At the pre-hearing conference and thereafter, these exhibits have been relabeled as exhibits 1 through 15. Can Franchise Tax Board please confirm that there are no objections to these exhibits?
No objections. Thank you.
Thank you. All right. Then FTB exhibits A through H and appellant exhibits 1 through 15 are admitted into evidence. This hearing is expected to take approximately 2 hours. And we will begin with the appellant's presentation, which will last approximately 60 minutes. Ms. Freeman, you may begin when you are ready.
Thank you. Good afternoon, and thank you for your time this afternoon to address the jurisdictional issue at hand. Appellant in this case timely filed its returns for the tax year and paid its self-assessed tax. Appellant's tax returns began on September 28th, 2014. and ended on August 28th, 2015. It's considered a short period return for a fiscal tax year beginning in 2014. Appellant did not file in California prior to September 28th, 2014, because it conducted no business activities prior to that date, as it had been incorporated in Delaware on April 1st, 2014. Respondent acknowledges that this is appellant's only tax return filed. For the tax years, appellant claimed an NOL deduction against its income, which created an AMT liability. Taxpayer appellant reduced its TMT by R&D credits as allowed by RNTC section 23036 D1. Respondent disagreed with appellant's use of R&D credits to offset its TMT and issued a notice of proposed assessment, which appellant timely protested. And then upon issuance of a notice of action by the FTB, appellant timely appealed the FTB's determination. Respondent, based solely on a cursory review of appellant's tax return, has asserted appellant lacks capacity to pursue this appeal based on Corporation Code Section 2203, Section C, because it did not first register with the California Secretary of State. Respondent has alleged with zero facts to support this assertion that appellant was conducting intrastate business solely based on this cursory review of its tax return filed for the tax year. As such, respondent asserts appellant was required to register to transact intrastate business, which it was not conducting, based on Corporation Code Section 2105. Respondent further asserts because appellant was required to register with SOS, Secretary of State, and didn't, it cannot maintain its appeal with the Office of Tax Appeals because OTA lacks jurisdiction to do so, citing the appeal of Reitman Atlantic Corporation to support its position. Appellant disagrees with respondent's assertion that appellant lacks capacity to pursue this timely appeal on the following grounds, each which will be addressed during this discussion. First, appellant was not required to register with SOS. Appellant did not conduct intrastate business at any time during the tax year. Respondent has no evidence that either appellant or its LLCs conducted intrastate business, and respondent's allegations therefore lack foundation. Further, the appeal of Reitman Atlantic Corporation is not applicable for many reasons, which will also be discussed. The balance of the discussion relates to California Corporation Code, so most of my references are to sections will be to the Corporation Code. Appellant admits there were some errors in its returns and has filed an amended return to correct these errors. They did not alter the tax at issue. But it's important to remember that appellant underwent material organizational changes immediately prior to this tax year, which caused these errors, which have since been corrected. Appellant had no filing obligation prior to or subsequent to this single filing, and the significant changes during the tax year, which also contributed to these unintentional issues that respondent has brought up. Appellant's exhibits are in the record to support the organizational change in its business operations. So I'm not going to, except for one respect to one particular document, I don't plan on going through the exhibits since they're already in the record. The first and primary issue was appellant's requirement to register with the Secretary of State. Appellant is not required to register because it was not conducting intrastate business. Appellant is considered a foreign corporation, and as a result of being formed in Delaware on April 1st, 2014, appellant formation documents are included in the exhibit file. Not all foreign corporations are required to register with Secretary of State. The statute is clear that only foreign corporations conducting intrastate business are required to be registered. Registration of foreign corporations conducting interstate or foreign business is optional. Statute is clear on that as well, the Corporation Code. Foreign corporations are not registered with the Secretary of State, may nevertheless have a filing obligation in California. There are thousands of such entities that have filing obligations with respondent, and these entities are referred to as non-qualified franchise taxpayers, or if they're not doing business, they're considered non-qualified income taxpayers. FTB has processes and procedures in place to sign such corporations not registered with the Secretary of State with a corporation number, and you can identify these non-qualified filers by their assigned corporation number, which starts with either a 9 or an 8. Here, appellant was a non-qualified franchise taxpayer, and FTB assigned appellant a non-qualified corporation number, which is 8114781. Appellant has filed a non-qualified franchise tax return as a non-qualified franchise taxpayer as a result of owning 2 disregarded single-member LLCs that were treated as doing business in the state during the tax year. The first LLC was Alien Technology Corporation, which was a registered LLC with the Secretary of State because it was formed in California. The second LLC owned by appellant during the tax year was Butterfield LLC, which is a foreign LLC. It was not registered as well. FTB has not asserted any issues with respect to those LLCs. Alien Technology held the legacy business of Alien Technology Corporation. I know there's a lot of aliens, but each one is unique and distinct. What happened was Alien Technology was formed when Alien Technology Corporation converted to an LLC. Alien Technology itself, which is the legacy business, was formed on December 13th, 1994, and was properly registered with the SOS because it was formed in California. Upon conversion to an LLC on September 14th, 2014, Alien Technology LLC also registered with the SOL as a continuity of the business. It was also formed in California. Documents related to the conversion of the LLC or the corporation to an LLC are included in the exhibit package. Both Butterfield LLC, which is the single member to Alien Technology LLC, and Alien Technology LLC itself were single-member disregarded entities for tax purposes and contributed to New Alien Corporation effective September 28, 2014. This is why the taxpayer's tax year starts on that date. Prior to that date, New Alien Corporation conducted no activities, and it had no independent activities of its own. This caused, effective that date, September 28, 2014, for New Alien Corporation to have a filing obligation in California as a function of owning these 2 single-member LLCs. New Alien Corporation itself was a transitional entity that was holding the disregarded LLCs for about 4 months while the terms of the creation of a corporate joint venture were worked out. New Alien Corporation, after the terms were worked out, sold the LLCs to Ruzan Technology Company Limited, effective December 17, 2014. And at that point, it obtained in return cash and a minority interest in the newly formed joint venture in exchange for the LLC interests. After the creation of the joint venture, New Alien Corporation, the taxpayer and appellant, sole activity was then holding the minority stock interest in this newly created joint venture. So those are the transactions that are reflected in New Alien Corporation's tax return for the tax year. It itself had no activities. All of the activities were conducted through the LLCs. It had no employees as well. FTB has asserted, after a cursory review of appellant's returns, that appellant was not registered with the California Secretary of State. We agree with that. It was a foreign corporation. But the FTB has also asserted, the respondent has also asserted that New Alien Corporation was conducting intrastate business. It's as a result of that, they have asserted that the appellant was required by Corporation Code 2105 to register with Secretary of State. The problem here is FTB is relying exclusively on appellant's tax returns. There's nothing within the tax returns themselves that state appellant was conducting intrastate business. And if you basically, I think this is the only exhibit that I would really want to go through in the exhibit binder. It's I assume that you have the same PDF pageation, but it's on page 318 of the exhibits. And basically, the FTB is relying primarily on the Schedule Q questions that were answered with respect to the taxpayer's business. So you have to remember, appellant did not start doing business until September 28, 2014. But when you look at the questions on Exhibit A, at least that's what's referenced when I look at the document, page 2 of the return, what it says is the corporations include, if you look at question C, it's blank. Question D, it says, are you in a federal consolidated return? It says no. And then it gets into its principal business activities, which include development and sale of RFID products. Well, here's the issue. These questions don't reflect that the taxpayer actually is a holding company, and as a disregarded entity owned by the taxpayer, the activities actually described on question E are for the LLC, which are its principal businesses. The other LLC, Butterfield, was really only a mere holding, but all the activities are in Alien Technology LLC. So the questions answered on question E are the answers for the LLC. Also, date of incorporation. The LLC, as a successor in interest, was incorporated under Alien Technology Corporation on December 13th, 1994 in California. But as a successor, the LLC, you have a continuity of interest, so that's the correct start date for that business, even though it is now an LLC. The problem with FTB's forms is they don't give you an opportunity to fully explain what's going on with the answers to these questions. Question G is also correct, but with respect to the LLC, Alien Technology Corporation, they did first start deriving income as its successor, which is now treated as a division of the appellant, did actually start its business in 1994. But this entity, appellant, actually didn't start business in California itself as a holding company until September 28, 2014. So it also indicates in question H, which is consistent with the filer, that this is their first return, which is correct. It's also showing that it was a successor to another corporation, which explains why the dates are different. So really the problem you have here is the forms itself cannot accommodate when you have situations when there's multiple trades or businesses or successors in business to a single corporation in this case. It also does not reflect that, at the end of the year, the taxpayer itself wasn't doing anything because it had actually sold the activities to the corporate joint venture. So really, that's the only exhibit I would really want to go through in this case. But what I would like to say is that we don't dispute that we're not registered. We're not required to. If you look at the rules in the statute, only foreign corporations that are conducting intrastate business are required to be registered. That doesn't mean they don't have a filing obligation. Taxpayer did timely file and report its liability. I would also go into the fact that the FTB has issued discovery requests with respect to this issue. Taxpayer appellant has never admitted to conducting intrastate business, has acknowledged that the activities at hand relate to Alien Technology LLC in its return. Alien Technology, in the course of the discovery request, figured out it had not filed its returns. And again, that's because of the transitions in the business activities, both prior to and during the tax year, and has since remedied that and filed tax returns itself, which were provided to the FTB for both Butterfield and Alien Technology LLC. And these activities of the LLC, which is really Alien Technology LLC, mirror the return for the appellant, but for the sale of the LLCs to the joint venture. So absent knowing there's an LLC in there and it being identical, like all the activities siloed into a single LLC, you would never be able to determine how much the activities of a particular corporation relate to an LLC. But in this particular case, you can tell because there's only one LLC with operations, and that was Alien Technology LLC. And again, as I pointed out, many of the tax forms the FTB has issued have deficiencies in being able to accommodate multiple LLCs owned by a single corporation. Similar problems occur with a group return when you have multiple businesses, because you really only have an opportunity to answer the questions for one entity. In this case, the taxpayer did say that its principal operations were from Alien Technology, but you can't tell that because it doesn't ask you that question in this particular case. As a result of reviewing the respondent's assertions as it relates to the appellant's returns, we did attempt to correct some of the issues with the return. The primary issue, it didn't affect the tax, was the fact that in preparing the return at that time, they had not completed the LLC returns for Alien Technology and LLC and Butterfield LLC. That was subsequently determined to be a deficiency in their filings, just because there were so many changes that year. They have since filed their returns, and the amended return we filed did correctly change the answer to that question to yes, they do own an LLC. So that was an inadvertent oversight to the original return. It had to be corrected in order to prevent Alien Technology LLC from being forfeited, because they did have a filing obligation. But that was the only return that we found was missing for the short period, 9/28 to 12/16, and returns were filed to correct that issue. There was no need to correct the return for New Alien Corporation because the income from the LLCs was already included in their filings. Again, aside from the sale of the LLC to create the joint venture, the income reported by appellant mirrors the return filed by the LLCs. And again, all activities reported by appellant, but for the stocks or but for the LLC interest sale, were conducted by New Alien or Alien Technology LLC. With respect to answering the question about being a domestic entity, taxpayer does admit that answer to that question was incorrect. While Alien Technology LLC is a domestic LLC because it was formed in California, itself, New Alien Corporation, appellant, was a foreign incorporated entity and should have been marking that box as foreign. Again, there's some confusion there when the primary activities in your return are from a domestic entity, but you yourself are foreign. So I believe they corrected that issue. With respect to the questions on Schedule Q of the return, which are on page 2, I point you to there. Nowhere within the return itself, in addition anywhere else, including the Schedule Q question, is there a question asking you whether you're conducting intrastate business? In this case, they do indicate they had an address in California, again, because they were formed here. But again, there is not a single question within the return stating that they conducted intrastate activities, either for the single member LLC or for the corporation. So we believe that despite the FTB's assertions, there's no evidence of them conducting intrastate activity. This issue was not audited. This issue was not addressed at protest. The questions in the discovery provided to respondent indicate appellant was not conducting intrastate activity, and there's been no inquiry whatsoever regarding the single member LLC's activities of whether they constitute conducting intrastate activities either. The only activities conducted by appellant during the tax years was acquiring the single member LLCs effective September 28th as a contribution to capital, holding the interest in the single member LLCs for about 4 months while the terms of the corporate joint venture were worked out, and then selling the single member LLCs to the joint venture once the terms were agreed upon, and thereafter holding the stock interest in a minority stock interest in the joint venture. Those were the sole activities conducted by New Alien Corporation during this short period tax return. Appellant did not enter into repeated and successive transactions business in the state. And appellant did not engage in interstate or foreign commerce because basically it was merely holding these intangible assets. Corp Code Section 191 defines what constitutes interstate business. We assert that while we did have a filing obligation because we held these LLCs, they were not considered doing business, and appellant's registration with the SOS was optional. Section 191 provides that a fornication shall not be considered transacting intrastate business merely because its subsidiary transacts interstate business or merely because of its status as one of the more of the following. The only ones that are relevant in 191, A would be they had an interest in a domestic limited liability company, which would have been Alien Technology LLC, a member of a foreign limited liability company, which would have been Butterfield LLC, as well as holding stock in a minority corporate joint venture. None of these activities by statute are considered transacting intrastate business. So basically, it's also important to point that the only single transaction they engaged in was selling the single member LLCs. It was a single isolated transaction and not consistent with 191, which requires repeated and successive transactions of its business in the state. Let alone in this case, we believe it would be considered foreign commerce because it was sold to a foreign entity, even if it was a transaction that was relevant. Appellant has fully explained its activities during the tax year, and respondent has failed to identify a single activity performed by appellant in California during the tax year, let alone identify a repeated and successive transactions in California. Appellant itself has no employees or business activities. All of the activities at issue were performed by Alien Technology LLC, which is treated as a disregarded division of appellant. And finally, again, I think it's important to point out respondent has made determination of audit, protest, or appeal that appellant conducted intrastate bid. It has merely alleged that has conducted intrastate business based on assumptions from information gleaned from the tax return that actually doesn't even state they were conducting intrastate business. In all correspondence addressing respondents' concerns, taxpayers denied conducting intrastate business, and no evidence exists that it was. Respondent has commented regarding the apportionment factor reported by appellant, which is currently at 90%. That apportionment factor is incorrect. It includes the gain on sale of the LLC interests, and if it's recalculated, their apportionment factors should have been adjusted at audit down to about 15%, but was not. Where our position is, FTB's assertions that we're conducting intrastate business is without merit, and respondent has failed to provide any factual support beyond information that it was gleaned from the return that doesn't even state that it was conducting intrastate business. And we believe that as a result, they have not met their burden of proof factually or laid any foundation to support their assertion. Let's see. I think it's also important to point out that not only was appellant not conducting intrastate business, the FTB respondent has failed to provide any evidence that Alien Technology LLC or Butterfield was engaged in intrastate business. They've made merely unsupported allegations that intrastate activities have been conducted. This issue was not addressed at audit or protest. Neither Alien Technology or Butterfield have admitted to conducting intrastate business. Alien Technology LLC was registered with SOS because it was formed here, and the successor business to Alien Technology Corporation, which was also formed here. And they're required to register with the Secretary of State regardless of whether they're conducting intrastate business because they're formed here. With respect to the other primary issue so that kind of concludes our position on whether the entity was required to be registered with the Secretary of State. We agree we're a foreign corp. We deny conducting intrastate business for the reasons set forth previously, as well as in the exhibits. I think the final remaining question is the appeal of Reitman Atlantic Corporation, which panel has requested that we address. I think after reviewing statute and the case, which is addressing Corp Code Section 2105C, it's important to point out that Reitman Atlantic is a 2002 State Board of Equalization decision involving a business that had not filed tax returns in California. In this case, we have. It held that Section 2105 and 2203C applied to Board of Equalization appeals and concluded that the taxpayer was conducting intrastate business and therefore didn't have standing to handle an appeal through the State Board of Equalization. I think it's important to point out, as was stated at the beginning of this hearing, that OTA is not a court, and that extensive efforts have been made to ensure the Office of Tax Appeals is not a court, including the allowance of non-attorneys to be panel members. I think there are a couple issues to consider related to the applicability of this case on the jurisdictional matter, including the fact here appellant filed his tax returns. Appellant and Reitman Atlantic did not. Appellant paid its self-assessed tax liability. Appellant and Reitman Atlantic did not. And further, the State Board of Equalization concluded the taxpayer was conducting intrastate business. There's no evidence in this case that appellant was. And then finally, or the LLCs in this case, and Section 2105 provides in relevant parts, so I'm not going to cite all of it, a foreign corporation subject to Chapter 21, commencing with 2100 in the Corp Code, which transacts intrastate business without complying with Section 2105, which is registration with Secretary of State, shall not maintain any action or proceeding upon any intrastate business so transacted in any court in the state. Here we have a situation where, one, taxpayer did not appellant did not conduct any intrastate business in the state, let alone it did not conduct any intrastate business with the Franchise Tax Board. It merely filed a return and filed an appeal when it disagreed with the assessment. And I think the OTA has aptly noted that it's not a court. The statute specifically applies to court proceedings. And as I kind of read it, if I'm conducting intrastate business and I want to sue somebody that I've transacted intrastate business with, I can file the complaint in court. I just can't maintain the court unless I'm maintain the action in court unless I'm registered with Secretary of State. Here, not only have I not conducted any intrastate business and filed in any court, because the OTA is not a court, I haven't conducted any intrastate business with the Franchise Tax Board as well. So I think you have to read the statute itself, which Reitman is addressing. And again, differentiating Reitman on the basis that State Board of Equalization is a different administrative body than OTA, and that OTA is not a court, that I don't believe 2105 applies in this instance for multiple reasons. One, not conducting intrastate business, OTA is not a court, and I did not conduct any intrastate business with respondent. Let's see. So based on the fact that we're not conducting intrastate business, and I don't believe 2105 of the Corp Code applies here, I don't believe the respondent's position to deny appellant's appeal on jurisdictional basis should be sustained. I think that's it.
Thank you. I just want to turn over to my co-panelists to see if they have any questions before we move forward with Franchise Tax Board's presentation. Judge Vasig, do you have any questions?
I do not have any questions at this time. Thank you.
Thank you. And Judge Aiken, do you have any questions?
Judge Aiken speaking. No questions from me at this time. Thank you.
Thank you. And you cover the question that was included in my minutes in order, so I don't have any questions either. Franchise Tax Board. Sorry, let me just scroll up in my notes here. You requested 45 minutes for your presentation, and you may begin when ready.
Thank you, Judge Long. Excuse me. Good afternoon, Judge Long, Judge Aiken, and Judge Vasig. The primary issue in this appeal is whether appellant New Alien Corporation has the capacity to maintain an appeal before the OTA as a non-qualified foreign corporation. To resolve this primary issue, we must first address secondary issues, both legal and factual. Also, in Judge Long's pre-hearing conference minutes and orders, he asked the parties to specifically address the precedential BOE opinion in the appeal of Reitman Atlantic Corporation, which I will hereafter refer to as Reitman. Additionally, he asked the parties to address whether Corporations Code Section 2203 Subdivision C applies to the OTA, given that the OTA is not a court. I will divide my presentation into two parts. First, I will address the legal issues presented in this appeal, including the controlling BOE presidential opinion in Reitman and Corporations Code Section 203 Subdivision C. Second, I will address the factual issues specific to this appeal. In summary, the law and the facts in this appeal are clear. The law states that a non-qualified foreign corporation who transacts intrastate business in California cannot maintain an appeal before the OTA. According to appellant's own uncontroverted admissions, it transacted intrastate business in California between September 28, 2014 and December 17, 2014, the period at issue in this appeal. Because appellant transacted intrastate business during this period and never qualified to do business in California, the OTA should dismiss this appeal in accordance with the controlling law. I'm happy to answer any questions the panel has throughout my presentation or at the end. First, the legal issues. The issue of whether a non-qualified corporation who transacted intrastate business in California has the capacity to maintain an appeal before the OTA was directly addressed and decided in Reitman. In Reitman, the BOE held that it will dismiss a non-qualified foreign corporation's appeal if it determines the non-qualified foreign corporation transacted intrastate business in California. Corporations Code Section 2105, Subdivision A provides in part, a foreign corporation shall not transact intrastate business without having first obtained from the Secretary of State a certificate of qualification. Corporations Code Section 191, Subdivision A provides that for purposes of Section 2105, transact intrastate business means entering into repeated and successive transactions of its business in this state other than interstate or foreign commerce. Corporations Code Section 2203, Subdivision C provides in part, a foreign corporation which transacts intrastate business without complying with Section 2105 shall not maintain any action or proceeding upon intrastate business so transacted in any court of this state, commence prior to compliance with Section 2105 until it has complied with the provisions thereof. In his pre-hearing conference minutes and orders, Judge Long correctly notes that the plain language of Subdivision C references, quote, any court in this state. It does not reference administrative tribunals such as the OTA or the BOE. Hence his question, whether Subdivision C applies to the OTA given that OTA is not a court. The short answer is no, it does not. However, Section 2105 and Reitman do. The purposes of business registration statutes are to officially establish a business as a legal entity separate from its owners providing them with legal protections like limited liability, allowing them to access banking and credit, and ensuring transparency by making information about the business publicly available, while also enabling the government to regulate and tax business activities properly. In Reitman, the BOE specifically noted what courts have noted, that the purpose of Section 2105 is to facilitate service of process and to protect against state tax evasion. Californians must know precisely who it is that they are transacting business with and how to obtain redress from wrongs committed by those with whom they transact business. Similarly, the government of California has the right to regulate and tax business activities within its jurisdiction. A domestic corporation, by virtue of its formation under the laws of California, is registered in California upon its formation. However, a foreign corporation is not, and therefore, it must register in California before it can transact business to ensure that the purposes of California's business registration statutes are effectuated. In Reitman, the BOE examined sections 2105 and 2203 in the broader context of the relevant statutory schemes, relevant case law, and the public policy served by both. The Reitman opinion does not rely on subdivision C of section 2203 alone. Rather, it relies on a body of law addressing California's business registration statutes. In Reitman, the BOE also analyzed the suspension and reviver statutes contained in the Revenue and Taxation Code. It noted that under Revenue and Taxation Code section 23301, a foreign corporation may forfeit the exercise in this state of its corporate powers, rights, and privileges if it fails to pay any tax, penalty, or interest due. This supports the policy long recognized by courts and administrative tribunals, quote, to prohibit the delinquent corporation from enjoying the ordinary privileges of a going concern in order that some pressure will be brought to bear to force the payment of taxes. Notably, the plain language of section 23301 of the Revenue and Taxation Code does not specifically state that a foreign corporation in forfeiture may not maintain any action or proceeding in court or in an administrative tribunal. Rather, it provides for the forfeiture of the corporation's powers, rights, and privileges. Courts have interpreted this to include the right to bring an action in court, and the BOE and the OTA have interpreted this to include the right to maintain an administrative tax appeal, most recently in the OTA's presidential opinion in the appeal of Depot Repair Services, LLC. Reitman is also in line with the BOE's previous precedent. In appeal of Al Turpa and Associates Incorporated, the BOE held that a non-qualified foreign corporation may not exercise the right to bring an administrative appeal before the BOE. In that appeal, the BOE did not
Mr. Miller?
distinguish. Yes,
I'm sorry to
Please.
interrupt. Can you say the name of that last BOE case that you cited again?
certainly. I'll give you the citation as well. It's appeal of Al Turpa and Associates Incorporated. Al is AL, Turpa is TIRPA, and Associates Incorporated. The citation is 97-SBE-007. I believe that case is also discussed within Reitman itself. In that appeal, the Al Turpa appeal, the BOE did not distinguish between those non-qualified foreign corporations that were merely doing business as defined in Revenue and Taxation Code section 23101, and those non-qualified foreign corporations that were transacting intrastate business as used in Corporations Code section 2105 and defined in Corporations Code section 191 subdivision A. In Reitman, at the FTB's urging, the BOE limited the rule established in the appeal of Al Turpa and Associates Incorporated to only those non-qualified foreign corporations that were transacting intrastate business. The BOE's opinion in Reitman is consistent with the overarching public policy that precludes corporations that do not comply with the business registration statutes from exercising the powers, rights, and privileges of those corporations that do, such as maintaining actions in court and at administrative tribunals. Under California Code of Regulations, Title 18, Section 30504, A precedential opinion of the BOE that was adopted prior to January 1st, 2018 is presidential authority to the OTA unless the OTA removes in whole or in part the presidential status of that opinion pursuant to section 30503. Thus, the OTA is bound by the BOE's opinion in Reitman unless it removes its presidential status. Removing the presidential status of Reitman would undermine the effectiveness of the business registration statutes and would be in direct opposition to California's public policy that precludes corporations that do not comply with the business registration statutes from exercising the powers, rights, and privileges of those corporations that do. Also, removing the presidential status of Reitman would lead to inequitable and absurd results. For example, a foreign corporation transacting business in California that affirmatively complies with Corporations Code Section 2105 and registers with the California Secretary of State would have fewer rights than a foreign corporation transacting business in California that flouts the law and fails to register at all. The former corporation would not be able to maintain an appeal before the OTA if it were forfeited, while the latter corporation would always be able to maintain an appeal before the OTA because its active registration status cannot be forfeited since it disregarded the legal requirement to register and to be subject to forfeiture in the first place. Accordingly, the FTB respectively requests that the OTA follow Reitman and dismiss a non-qualified foreign corporation's appeal if it determines the non-qualified corporation transacted intrastate business in California. Now, I will address the factual issues in this appeal. The parties agree that New Alien Corporation has never registered with the California Secretary of State. Also, appellant provided cogent documentary evidence that verifies it is in fact a Delaware corporation, despite appellant's admission on its California corporate tax return that it was incorporated in California. Therefore, the parties agree that New Alien Corporation is a non-qualified foreign corporation. As a non-qualified foreign corporation under Reitman, appellant cannot maintain this appeal if it transacted intrastate business during its only reporting period, September 28th, 2014 through December 17th, 2014. Therefore, the factual issue for the OTA to determine in this hearing is whether New Alien Corporation transacted intrastate business between September 28th, 2014 and December 17th, 2014. The facts relating to this issue are well documented in the parties' briefs and exhibits. Today, appellant alleges that the FTB position is based on a cursory review of its tax return and no evidence. On the contrary, respondent conducted a very thorough review of appellant's tax return and bases its position on appellant's own admissions on that return. Following is a brief recitation of the facts most relevant to the determination of whether appellant transacted intrastate business during this period. On June 15th, 2016, appellant filed its corporate tax return for taxable year beginning September 28th, 2014 and ending August 28th, 2015. The return was prepared by Deloitte Tax LLP, appellant's representative in this appeal. On its sole California corporate tax return, appellant reports the following. Appellant reports its principal business activity code as 334410, semiconductor and other electronic component manufacturing. Appellant describes its business activity as the development and sale of radio frequency identification products. Appellant describes its product or services as ultra-high frequency radio frequency identification tags and readers. Regarding its income, appellant reports gross receipts or sales of $7,691,864. Sales within California of $1,171,449. Other gross receipts within California of $38,996,041. A sales factor of 90.8867% to California. Contrary to appellant's contentions here today, at audit, FTB did in fact reduce that percentage to 44%. On its return, appellant also reported net income for California purposes of $32,576,567. Appellant also reported that it does not own a single member LLC or generate or claim credits that are attributable to a single member LLC. Following the audit of appellant's Lone California corporate tax return, respondent issued its notice of action affirming its proposed assessment, which is the subject of this current appeal. The OTA granted respondent's motion to sever the issue of appellant's capacity to prosecute the appeal. In its opposition to this motion and in its subsequent briefing, appellant contends the following. 1, it is a foreign corporation organized under the laws of Delaware. 2, it is a holding company. 3, all activities at issue in the appeal were conducted through Alien Technology LLC, a single member LLC owned by appellant. And 4, it was not transacting intrastate business during the taxable period at issue. Each one of these contentions directly contradicts appellant's previous admissions sworn under penalty of perjury on its loan form 100. Under OTA's own precedent in Appeal of Johnson, quote, statements a taxpayer makes on its signed tax return are considered binding admissions unless there is cogent evidence that indicates such statements are wrong. Furthermore, the OTA held that the trier of fact need not accept taxpayers' self-serving contentions, especially in the absence of reliable corroborating evidence. As detailed in respondent's briefing, there is no cogent evidence or reliable corroborating evidence to establish that the transactions reported on appellant's Form 100 were transacted by anyone other than appellant, New Alien Corporation. During this appeal, respondent conducted informal discovery and requested all information and documentation that support appellant's contentions that it did not transact intrastate business in California during the tax period at issue in this appeal, and that all business was transacted through Alien Technology LLC, its wholly owned single member LLC, as appellant alleges. In response, appellant provided voluminous documentation pertaining to its corporate reorganization and restructuring plan, including a PowerPoint presentation and organizational documents. However, it did not provide a single piece of documentary or testamentary evidence pertaining to its gross sales, its business income, and its net income for California purposes that itself reported on its tax return at issue in this appeal. Therefore, it provided no cogent evidence or corroborating evidence to prove that anyone other than New Alien Corporation transacted business in California between September 28th, 2014 and December 17th, 2014. No books and records, no declarations from percipient witnesses, no invoices, no sales receipts, nothing. Under OTA precedent, a taxpayer's failure to produce evidence that is within its control gives rise to the presumption that such evidence is unfavorable to its case. Concurrent with its subsequent briefing, appellant filed an untimely and invalid Form 100X. Appellant concedes that the statute of limitation for filing this amended return has expired, and it is providing it merely for informational purposes. However, the information contained on the invalid Form 100X does not support appellant's contentions. On its Form 100X, appellant does not report any ownership interests in Alien Technology LLC or Butterfield LLC. Thus, the only amendment that appellant appears to make on its Form 100X is changing its answer to question BB on Schedule Q. Either it owned an interest in or generated or claimed credits attributable to a single member LLC. It does not identify which LLC that is. Today, respondent's representative alleges that the real problem with their tax return is the deficiency in FTB's forms. Appellant's representative is well aware that taxpayers are free to attach as many schedules and attachments as necessary to fully explain its business activity. Also, deficiencies in FTB's forms do not explain why it stated it did not own or generate credits from a single member LLC. Deficiencies in FTB's forms also do not explain why appellant failed to disclose its ownership interests in Alien Technology LLC or Butterfield LLC. And deficiency in FTB's forms do not explain why Alien Technology LLC and Butterfield LLC failed to file timely returns for the tax period for 8 years in the midst of this appeal. Lastly, deficiencies in FTB's forms do not explain why appellant was the only entity among these related entities to file a return for that period. If New Alien Corporation is the only entity reporting these business activities for the taxable period, it is not unreasonable to presume that New Alien Corporation is the entity conducting these business activities. All other information on its amended return mirror its original return, including its principal activity code, business activity code, its business activity description, its description of its product or service, and its reporting of its California income. Notably, it does not report a business activity code or a business activity description consistent with being a holding company. Per the 2014 California Corporation Tax Booklet, the principal business activity code for a holding company, other than a banking holding company, is 551112. Appellant also submitted copies of Forms 568 for Alien Technology LLC and Butterfield LLC for the period September 28, 2014 through December 17, 2014. These untimely returns were filed in March 2023, approximately 8 years after the due date. Appellant contends that all its business activities were conducted exclusively by Alien Technology LLC as a single member LLC. However, appellant provides no reliable corroborating evidence, such as Alien Technology LLC's business records or its own business records. The untimely returns, without any source documentation to substantiate the reporting contained therein, are unsupported assertions. And under OTA precedent, unsupported assertions cannot satisfy a taxpayer's burden of proof. Certainly, unsupported assertions do not constitute cogent evidence to indicate that appellant's binding admissions on its tax return are wrong. To this date, appellant still has not provided any books and records, declarations from precipient witnesses, no invoices or sales receipts, or any witness even here today to substantiate its assertions regarding the intrastate sales transactions reported on its tax return. Its failure to do so creates the presumption that such evidence is unfavorable to its case. Inexplicably, here today, appellant now alleges that not even Alien Technology LLC admits to conducting intrastate business. So none of these entities conducted intrastate business, despite millions of dollars of activity, including sales within California. So none of these foreign entities were required to register with the California Secretary of State. This simply cannot be the case. Accordingly, OTA should find that appellant has not established that anyone other than New Alien Corporation transacted the intrastate business reported on its tax return for the period September 18th, 2014 through December 17th, 2014. Because appellant transacted intrastate business during this period and never qualified to do business in California, the OTA should dismiss this appeal in accordance with the controlling law. And I'm happy to take any questions you may have at this time. Thank you.
Thank you. Judge Fatigue, do you have any questions?
Not at this time. Thank you.
Thank you. And Judge Aiken, do you have any questions?
No questions at this time. Thank you.
Thank you. Now, with respect to this issue, the jurisdictional issue was brought up on after the appeal was already in progress. Is my understanding that part of the issue is that in addition to the corporation, the reorganization documents, part of the issue is that Alien Tech did not provide any books and records with respect to its gross receipts in business?
Yes, that's correct.
Okay.
And also, even though today appellant's representative won't even admit that Alien Technology LLC conducted this business. So I'm not sure if those business records would do any good.
And were those business records expressly asked for? I don't recall seeing that in the briefing.
Yes.
They were? Okay.
We requested, I have the jurisdictional or the informal discovery request. They weren't itemized as specific requests, but we did request all information and documentation to substantiate that they were not doing business. I've got it right here. This is Exhibit C, page 1. Please provide all information and documentation that supports your client's contentions regarding, I'm sorry, I should have read the first 2 paragraphs. I repeat appellant's contentions that it is a foreign corporation organized under the laws of Delaware. It's a holding company. All activities at issue in the appeal are conducted through a single member LLC owned by their client, Alien Technology LLC, and it was not transacting interstate business during the taxable year. So I specifically referenced their contention that all business activity was done through that single member LLC and requested all information and documentation that supports those contentions. So that was requested. And then I itemize specifically additional requests that I was specifically looking for, including but not limited to.
Okay, thank you. Ms. Freeman, if OTA were to hold the record open for 30 days following this hearing, would you be able to provide additional documentation with respect to the business activities of, sorry, let me just make sure I have this one correct, Alien Technology, that's the single member LLC?
So we're long past the record retention period. The FTB has not asked for their books and records. We gave them the tax returns. Upon reviewing the discovery, the taxpayer, we determined for the taxpayer they were missing their LLC returns, which were required to be filed. So we did file them based on the original return records for the LLC, which were included in the return for taxpayers. So we had the data to provide the preparation of the return, which were the books and records. And so the return you see is based on those, the summary of those records. But this entity was sold to a foreign entity back in 2014, which is what, 10 years ago, over 10 years ago. So the likelihood of what all books and records, I mean, it's an untimely request by the FTB to prove an issue that we have actually given extensive documentation explaining the conversion of the actual operating entity into the LLC and conversion to an LLC. Those were the business operations. So we have given him the documentation, the agency, the documentation showing that the legacy business was converted to an LLC, and that's where the operations ended up. There, we also gave him all the other formation documents showing we created an entity to hold those LLCs, and that nothing was occurring in those LLCs beyond validating their ability to the board minutes so that they could operate and hold those LLCs. So the records clearly show where the operations, the actual business operations ended up. So they have those records. To say we didn't give them anything is an incorrect statement. The documentation, including the reorganization documentations, are in the file that show the transactions, and we actually gave the source documents to show the conversion of the operating entity into the LLC. There are no other documents liquidating or recontributing those activities directly to New Alien Corporation. They were still held in the LLC, and those documents are in the record.
Okay, thank you. I don't have any further questions. So with that,
Judge Long, may I add one more thing?
sure, go ahead.
Thank you. I appreciate that. I just wanted to clarify, we never alleged that appellant had not provided us anything. We simply allege they haven't provided us any evidence relating to those sales and activities that were conducted in California. We understand the business reorganization. However, there's no evidence in those documents provided by the appellant even referencing any of those sales conducted in California. Thus, the best evidence of those sales is the appellant's own admissions on its tax return that have not been controverted here. Thank you.
Okay, thank you. All right, well then, moving forward, I think we are ready for appellant's closing presentation. And Ms. Freeman, you requested 10 minutes and may begin when ready.
Considering everything he's alleging, I was short on the other one, so I might take a few minutes extra, maybe.
Yes, that would be fine.
Okay, so I don't expect it to go long. The taxpayer in this case, this is old and cold. This has been going on since 2015-16. I mean, the taxpayer, I think, was immediately audited by the agency. FTB never looked into the issue of whether or not the taxpayer appellant was conducting intrastate business at audit or protest. The documentation that was provided through discovery was extensive, showing the incomplete reorganization, including PowerPoint presentations and intent to basically convert the actual operating entity, which was Alien Technology Corporation, to an LLC, and contribute it to the corporation so that all the activities at hand were being conducted through the LLC, which was held by another LLC, and then the actual sales transaction to create the joint venture. The whole point of New Alien Corporation was a transitory entity, which is why it never filed again after this. Once it sold the LLCs to the minority and held a minority interest in this stock joint venture, it was purely a transitory entity. If they were going to have the activities contributed to the joint venture, they would have had to sell New Alien Corporation itself, which is why you see the gain of the LLC in the return is because the activities are in the LLC, not New Alien. All of this can be directly inferred from the return. If you're going to create a joint venture and the activities are being conducted by New Alien Corporation, they would have had to sell New Alien Corporation to the joint venture. They did not. They sold the LLCs because that's where the operating activities were. Now, that said, because there was so much transitory activity to create this joint venture, both prior to the tax year, which was the conversion of the corporation to the LLC, the contribution of the LLC to the corp so they could hold it long enough to create the joint venture and work out the terms, and then the sale of the actual business activities, which were LLC interests, to the corporate joint venture, and the remaining interest of New Alien Corporation sitting there not sold to the joint venture. It's very clear that the activities that are not being conducted by New Alien Corporation. They're being conducted through, and it can all be inferred from all the documentation evidence that was obtained by the agency, that these activities are not being conducted directly by New Alien Corporation. I agree, it says that its principal business activities are the Alien Technology LLC activities, because that's the only thing that was going on through the single member LLC in that entity. Okay, it is a holding company, but because the principal business activities of the LLC, which is treated as a disregarded division of the entity, it is a fair reflection on the return that the principal business activities owned by the corporation, conducted through an LLC, that's its principal business activities. There's nothing in those answers tell you that it's conducting intrastate business. It just says, this is what's going on. We did fix the question regarding the LLC interests being owned. Okay. The question is, do you own an LLC, or you own an LLC conducting generating credit? So the question BB answers both. The problem is the question's so poorly worded on the return, it doesn't tell you in question BB which one you're answering. Now, I think subsequent to these years, the tax returns do have you disclose who you own as a single member LLC. I think there's a schedule now, but back then there was not, and you would never see the names of the single member LLCs owned by the corporation on the return. You would only list out the corporate subsidiaries, and you would also see those on the federal return that's attached, because if you file a federal return, But the thing is, because for federal purposes, there's no filing requirements for these LLCs in a federal return, you can't tell that they own a single member LLC, even on the federal return. So to argue that you didn't disclose that you own them, we fixed the return, signed under penalty of perjury, and the FTB is disregarding the amended return that's attempting to fix this issue. You have to remember, during the tax year, the taxpayer also went through additional transition in that I now contributed the LLCs in. I have the LLCs. I have this principal trader business through December 18th, okay, or 17th. And then after that, I'm doing nothing but mere holding, okay? There was confusion apparently in the preparation of these returns because they had never filed these returns because they're new entities, that during the course of the year, when they got to the end of their filing, they didn't notice them because they didn't own them anymore. So it was missed in the filing, which is why New Alien Technology LLC is registered. They had to file. So we did get the taxpayer, which inadvertently missed this filing, to file returns and pay the tax and sign those returns under penalty of perjury. The documentation, the reorganization, the official documents filed in California, all of those documents have been provided to the FTB and they're ignoring them. Okay. But what I think foundationally supports my position is the fact is if New Alien Technology or New Alien Corporation was actually performing the activities themselves, that is the stock of that entity would have then had to have been sold to the joint venture, and it was not. So with respect to the other issues, there was quite a few. Let's see. If what I'm suggesting, I'm not suggesting whether the appellant or New Alien or Alien Technology LLC was conducting intrastate activities or not. I don't know. Okay, the return doesn't tell you that. The FTB has never asked that question at audit or protest. And it wasn't until, 8 years after the return was filed, they asked this question. And there's no evidence. The FTB or appellant has denied conducting intrastate business because all it did was acquire through contribution to capital the LLCs, hold the LLCs, sell them to the joint venture, creating the joint venture, and then after that, taking back the minority interest in the joint venture and holding it. And because it was merely holding an intangible, it no longer had a filing obligation because the income is now flowing through a corporate joint venture, and the only thing you're going to get is dividends. Okay, so what happened after that? After the tax year is irrelevant. It's not a discussion, but my point is they stopped having a filing obligation, filed a short period return. And again, the return itself is self-evident that itself was not conducting the business itself, or New Alien Corporation would have had to been sold itself. If you look at the LLC returns that were filed under penalty of perjury, the lowest tier LLC was Alien Technology LLC. It's reporting all the business activities and mirrors the return based on the records. Our records reflect that was the only activity that was used to prepare both the LLC return, the Butterfield return, because that income flows up to Butterfield, although no LLC fee is due. It's only due at the lowest tier. And then that income then flows into the return and is indistinguishable from the activities of its members because a disregarded LLC is treated for all purposes as disregarded as if it was conducted by the member. That's why you can't tell. That was my point. If you look at the return, the questions are being answered because the principal business activity and the only business activity was conducted during that 4-month period by Alien Technology LLC. So as far as that, there's no evidence of whether they were conducting intrastate business either through Alien Technology LLC. We know for a fact for New Alien Corporation, they were not. The Corp Code specifically exempts these activities of merely holding an LLC interest from being considered doing business, from holding foreign stock, from doing business, domestic stock. And really those were the only activities conducted by appellant during the years. It was not conducting intrastate business. The return itself does not conclude that it's conducting intrastate business. It's just information. And again, our position is the FTB has not provided any evidence that what intrastate business was conducted. And if it was conducted, it would have been conducted through Alien Technology LLC, which was required to register with Secretary of State, not because it was conducting intrastate business, but because it was formed there. So just the fact that it's registered doesn't even prove itself that it was conducting intrastate business. As far as, did want to clarify, I did not prepare the return. I was not at Deloitte at that time period. I did work with the team on the preparation of the amended return and the LLC returns, which we found were missing. And then with respect to the Reitman case, there are discussions of forfeiture in there, which is not an issue in this case. The statute is clear that they did not have to register if they're not conducting intrastate business. I think Alturpa basically distinguished between or comments on the fact that there's a distinction between doing business and intrastate business, and they're two different things. And again, I reiterate the fact that I agree OTA is not a court. There's no intrastate activity occurring between the FTB and the appellant, so that's not an issue. And then again, that the taxpayer did not conduct any intrastate business at all itself. All of it was conducted through the LLC. And again, even though they're arguing that, if the respondent is arguing that we didn't provide any evidence, it's self-evidence in the fact that it's because I created a joint venture to continue the new alien or the alien technology business with a foreign investor. If I in fact was conducting the business myself, I would have had to sold the business. That sale occurred in December of 2014, and my business, New Alien Corporation, was not sold because it's not conducting the business. I think that's it.
Okay, thank you. Before we conclude, Judge Aiken has let me know that she has a question.
Sure.
Judge Aiken?
Yes, thank you. I'm going to pose it to a franchise tax board first, but then I'd like also appellant to answer it as well. If I understood the presentation correctly, Mr. Miller, FTB did do an audit, right, of appellant. And you said, I think that FTB adjusted the apportionment factor from more than 90% down to, I think you said 44%. I'm wondering if maybe those books and records would show whether or not those activities were conducted directly by appellant, or whether that would show that it was done through the single member LLC. I'm forgetting the name of the Alien LLC, but the Alien LLC.
There's a lot of them.
Yes.
They may. I don't believe so. I reviewed those records. I didn't see any indication that that was evidence there. It's not in the record here today. So we really can't consider it, but not to my recollection, it is not. As Ms. Freeman notes, the issue of transacting business and who transacted the business was not covered in the audit. It only became an issue here today because during this appeal, beginning in the course of preparing our opening brief, our due diligence requires us to check the SOS website to make sure an entity is registered before conducting an appeal, or before in order to have capacity to conduct an appeal. We discovered it was not registered, and so there was no reason to even suspect that New Alien was not registered until it filed this appeal before the OTA. So the issue of whether it transacted business within California such that it was required to register with the Secretary of State was not an issue at the audit, because the appellant had not appealed. By appealing, that issue now became an issue that we had to address. So the only time to address it was in this appeal, because they appealed with the OTA and it failed to register. Does that clarify, I hope, or answer your question?
It does, thank you. And same question to you,
Sure.
Ms. Freeman. Do you know if the documentation that was provided during the protest, the audit or protest, understanding that this issue wasn't specifically examined, do you think that that documentation might show, you know, whether the business was being conducted directly by appellant or through the LLC? Or
So-
would it not show that? Do you know?
Yes, I do know. As a tax practitioner who helps people prepare returns, I don't personally prepare returns. I avoid that. I do help people prepare returns and review the documentation all the time. So the issue with a disregarded entity is when you are preparing a tax return, they aggregate all of the single member LLCs into a single column. You know, if you go way back into the preparation, there are actual column or file or lines for each disregarded entity, but they're summarized similar to what you do with a REIT and qualified REIT subsidiaries. They have a breakdown, but in this case, there's only one operating entity. So when you look at the single column that you see, there's only one column because there's only one operating entity. Even Butterfield LLC was just merely holding the interest in Alien Technology LLC, which was the successor to Alien Technology Corporation. Yes, there's a lot of aliens. So the original is Alien Technology Corporation that converts to an LLC and is now Alien Technology LLC. So that was the operating entity that goes back to 94 was Alien Technology Corporation. And then it converted to an LLC and then became Alien Technology LLC. So you're not going to see a differentiation in the audit work papers that would show how much was my new Alien Corporation versus Alien Technology LLC, because it was all in Alien Technology LLC. Now, the audit should, as a former FTB auditor, it was self-apparent in the return filing, this was a non-qualified entity, because as I pointed out in the beginning of my presentation, if you register with the Secretary of State, your first number and your corporation number is somewhere between 0 and 5. So if your number is 0, you're really old entity. You're one of the original filers because it's an ascending number, right? So they may be a bit to the 5s by now. I know they're definitely to the 4s. So any corporation that has a number that between 0 and 4, or maybe now 0 and 5, is registered with the Secretary of State if it's a corporation. You absolutely know if it's non-qualified and not registered because the first number of the corporation number is a 9 or an 8. Entity number, you would know this as an auditor. You would know it was not qualified day one. If they wanted to address the issue at audit, they should have. They didn't.
Judge Aiken, may I add one more thing? Would you mind? I think it'll be helpful.
Yes, go ahead.
Okay, thank you. I just refamiliarized myself with the audit, and it's not in there. The only issue at audit, the only issue that was audited during the audit was the taxpayers' right to reduce their AMT using their research credit. They didn't even audit the actual research credit itself and verify that the research credit, like a normal research credit audit would. It was simply the issue of whether they could reduce their AMT. So that type of documentation was not requested or provided by the taxpayer. Ms. Freeman has a couple of other appeals with us with the same single issue. I believe there's 6 appeals before the OTA currently with this single issue audit as well. So it was really a focused audit to disallow certain taxpayers who have claimed the research credit against their AMT. So this was not covered. And as I said, it wouldn't have been audited. The issue of transaction of business in California, and because it wasn't an issue until they actually filed an appeal of the notice of action. Thank you.
Yes, understood. Okay, thank you. That does wrap up the questions I had. I did have one follow-up question for Ms. Freeman.
Sure.
I noticed on the tax return that appellant reports that it has offices located in California. Were those appellant's offices, or were those the offices of the single member LLCs? And if they were appellants, how would that impact the analysis of whether or not appellant was transacting interstate business?
the office in I forget where it is. Usually in Silicon Valley.
Thursday.
It's the Legacy Alien Technology Corporation's business operation location. And they use the address for filing purposes, but they had no employees, they had no offices, they did not own the buildings. That's all Alien Technology LLC's acquired business location as a result of the conversion from a corporation to an LLC. And it's not uncommon, just so you know, for, entities that are not doing anything to use the LLC as an affiliate's address because they got to get their mail.
Understood. And that answers my questions. I don't have any additional questions, so I'll pass it back to Judge Long.
Thank you. I believe we're ready to conclude today's hearing. Just want to thank you for joining us today. Are my co-panelists ready to close this appeal? Judge Haseek?
Yes, I am. Thank you.
Judge Aiken?
Yes, I am ready to conclude. Thank you.
Thank you. And this case is submitted on Tuesday, December 17th, 2024. The record with respect to the severed issue of jurisdiction is now closed.
Thank you.